Consumers ask, how much will this cost me? Stewards ask, how productive can this dollar become over the remainder of my lifetime?
Us, in the eyes of the banks, we are the product. They're just waiting for us to come in so that they can exercise their playbook and take advantage of us.
It's because they've been conditioned to think and act like a consumer, not like a banker. And those are two completely different operating systems.
The cavalry has arrived.
Okay, so consumers are taught to shop for money, and bankers are taught to steward capital. And if you think of that, so those two sentences, they're only like maybe 10 words apart, but they produce completely different lives. And most people, truthfully, they don't realize what operating system they're running. Like, we talk to people who don't realize they've spent decades chasing lower interest rates, lower monthly payments, better financing rates. They get really, really good at shopping, but nobody's taught them how to become a steward of capital. And so to anybody watching this episode of the Command Post, I want to ask you a question. When was the last time you made a financial decision and the very first question you asked wasn't, what's the interest rate? But instead, who's becoming wealthier because of this decision? Am I becoming a better steward of my own capital? And believe me, the answer is probably never. And don't feel bad about that, because nobody's taught us to think that way about money, right? What have we been taught to do? To borrow, how to budget, how to save, how to invest. But who is sitting down and teaching us how to think like the very institutions that we borrow from? Ash, isn't that kind of ironic?
It definitely is. And I appreciate you bringing up that question, because it's always, who has the best rate? Who's got the lowest rate, right? How can I get the most out of this rate? And it's interesting because once you start seeing how it actually works, then the question turns more along the lines of, where can I go to still access the money where I'm paying the least amount of volume?
But this bleeds into the discussions that happen when people are exploring policy loans and being in a position of controlling how they finance the things that they need. They're still asking questions about rate. And it's because we've spent our lives borrowing from banks without ever asking, why do banks think and behave so much differently than we do? It's like taking parenting advice from your teenager, right? They have a lot of confidence, but they might not have the operating manual yet. But that's what Ash and I are going to discuss. If you spend the next hour or so with him and I, like, you're going to walk away definitely looking at money in a completely different way. And I don't say that lightly, because by the end of the episode, you're going to understand why millions of intelligent, hardworking people just like you spend their entire financial lives chasing the wrong number. And it's not because they're unintelligent. It's because they've been conditioned to think and act like a consumer, not like a banker. And those are two completely different operating systems. We're going to explore why my late mentor, the late Nelson Nash, he never set out to teach people how to find cheaper money. He set out to teach people how to become better stewards of capital. And trust me, those are not the same thing. We're going to challenge one of the biggest assumptions in personal finance. We're going to explore why banks ask completely different questions than consumers do. And we're going to unpack a bit more one of Nelson's fundamental truths, that your money must reside somewhere, whether it's a checking account, a brokerage account, real estate, a business, a dividend-paying whole life insurance policy. Your money doesn't disappear at night, and it shouldn't go to sleep anywhere either. So if your money's wearing pants and binge watching Netflix. It might be time for an intervention, Ash.
Yeah, intervention in a shower. So, um, yeah, I'm glad you brought up the word conditioning, Jayson,
Okay.
because if you think about it, we are conditioned to think and act a certain way when it comes to everything finances. And some of us are in different positions than others based on what our life experience is and what we've come across and what we know from an education perspective. But that conditioning bit, you know us in the eyes of the banks, we are the product. They're just waiting for us to come in so that they can exercise their playbook and take advantage of us, so that because a lot of the times there's not a lot of options when it comes to trying to access capital and get capital that you may need to finance those things throughout the course of your life. And when you become the product, you have to really ask yourself, whose interest do they have in mind, theirs or
Mm.
ours?
All day long. Here's another question for people who are viewing this or listening to it. So what if conventional banks, what if they made financial decisions the same way that consumers do? So think about that, right? Imagine, the CEO of a conventional bank walking into a board meeting and saying, all right, folks, we've got a problem. We found another bank that'll lend us money for 0.25% less. So we're going to reorganize our entire financial strategy. Ash, can you imagine that meeting?
That would be a very interesting boardroom to be in at that moment in time. And yeah, yeah, yeah. And you can always go back to Nelson's principles and all the stuff that he says, because at every aspect, you can apply it somewhere. And when we're thinking about, and we're just talking about this right now, and people looking at rates and trying to track this down, and it all comes down to the reason why they're doing that is because those that have the gold make the rules.
That's precisely it. And when Nash mentioned Nelson, he's referring to the late R. Nelson Nash. He authored this, is my original copy. He authored the book, this #1 bestseller book. It's titled Becoming Your Own Banker. If you don't have this in your wealth building library, it's a 92-page read. You need to add it to your wealth building library. It changed my life back in July of '08. And, banks don't think that way. They know exactly what interest rates are. They price them, they manage them, they forecast them, but they don't build their entire financial strategy around chasing them. So why do consumers do that?
Well, I think the part of it is they're always looking for the next thing, right? That instant gratification. Oh, I found that another rate that's 0.25% cheaper than the other one. that must be better for me.
Yeah, and think about one of the things that consumers borrow money for the most is cars. And when you see these ads, and you see that they're promoting what the payment will be, why aren't they advertising the total cost? Just think about that. And people will spend 3 weeks trying to save a half a percentage point on a financing deal or a loan, and won't spend 30 minutes asking whether the decision they're financing is actually making them wealthier. We've all done that. I know I have. And so if you're watching this right now, don't think about your neighbor. Don't think about your brother-in-law. Don't think about that friend who's always refinancing something. Think about your own thinking. Think about you. When's the last time you made a financial decision where the first question you asked was, who is getting wealthier from this transaction? And then just think about your thinking.
That's exactly what it takes, right, Jayson? It takes a shift in your thinking.
That is the very beginning, because we obsess over monthly payments, right? And that's, again, how we've come up in putting our finances together. So when people, say something like, hey, I'm saving $50 and I've made substantial progress, that might very well be true for that particular family and for their finances. But again, I go back to, like, why does almost every car commercial advertise the payment instead of the total cost? And because the consumer is going, hey, I got a great deal because my payment is lower. And what are they usually forgetting to measure?
It's because the total price would scare them away.
Yeah, it's very true. It's very true. And you know, when interest rates fall, we know what usually happens, right? People borrow more money, businesses expand, families they would buy homes, companies invest, and capital starts moving faster. So let me ask you something, Ash. So if a bank earns a little bit less on every loan, but they make 10 times as many loans, did the bank lose anything?
Absolutely not.
It won a lot. And that's where most people get really tripped up, right? Because they're looking at the profit on one transaction. The bank's looking at the profit on hundreds of thousands of transactions.
There's definitely a similarity with what Nelson Nash would teach about infinite banking and the banks. We both think long range.
Oh yeah,
I'll
all
give them
day long.
that. I will give them that. They are in it for the long game, for sure.
Yeah, 1,000% they are. And can you think of a time where you've heard someone say, "I'm just waiting for interest rates to come down"?
Yeah, absolutely.
Okay, so
Absolutely.
what assumption are they making? They're assuming that the interest rate itself determines financial success. But
Mhm.
what if that's the wrong question? What if the better question is, what happens when my capital moves faster?
Yeah, and these are the questions they should be asking. Like that's, but
Like,
but hey, it's there's a reason that why this stuff isn't taught in schools, right? Like, come
right.
on, like this, and but these are great conversations to have, and we really should be thinking through this. So back to what you had said, like is that financial decision you're about to make, is it going to actually benefit you, or do you just think it's going to benefit you because that's what the advertising said?
Right. Here's a write me downer. This is for everybody watching this. Grab a pen or grab your keyboard. Write this down. Consumers measure the price of money. Banks measure the productivity of money. Those are two completely different operating systems entirely. And what Nelson does such a brilliant job of in his book titled Becoming Your Own Banker is he opens your eyes to a whole new financial world where you can become the banker as it relates to your needs, and that the banking function, the actual function, should be held at the you and me level. That's where it belongs. And I think that conditioning that you and I have talked about, right? That how people have been brought up financially, I think that might be where people accidentally reduce the infinite banking concept to an interest rate discussion. And I don't think, in fact, I know that Nelson wouldn't have wanted that, right? Because like I mentioned earlier, he wasn't trying to teach people how to find cheaper money. He was teaching people how to become better stewards of capital. There's a profound difference there.
That is such a great point. And I even had a conversation about that this week, a great conversation with somebody that, just started talking with us. And they even realized, and I was so happy when they realized that all capital has a cost.
That's right.
He was telling me that, and I was like, this is fantastic. Like I can't I was ecstatic. I was like, this is great. Realizing that, no matter what, all capital has a cost, and we have this tendency to default and treat our money less than anybody else's money that we're using. And I just
100%.
yeah, and it just completely changes the conversation when you talk about that. But it's once people start to realize that, it's like why would you treat your money any less important than the banks?
That's an incredible point, and it speaks perfectly to what Nelson said on page 35 of his book, Becoming Your Own Banker. He said, Accepting a new point of reference means that one must develop new habits. In talking with members of the Infinite Banking Concept think tank, which is an annual event that happens typically the week after Super Bowl each year, and it's an incredible few days. And he said, in speaking with members of the Infinite Banking Concept think tank, we continue to notice that many are still caught up in the posture of thinking that the matter is a function of interest rates. This is a fatal error. It has to do with recognizing where money is flowing to and the failure of charging interest to yourself for the things that you buy using your own banking system. Anytime that you can cut out the payment of interest to others and direct that same market rate of interest to an entity that you own and control, which is subject to minimal taxation, because life insurance companies themselves, they do pay taxes, then you have improved your situation. I want you to think, anybody who's watching, I want you to think about your own money right now, whether it's 10,000, a million, 100,000, your money is going to reside somewhere. That's unavoidable. The question is, where should your capital reside while it waits for its next assignment? Period. Every dollar that you spend is going to spend the rest of its life somewhere. In another bank, in another checking account, another brokerage account, another rental property, a business. It has to reside somewhere. So maybe you might have been asking the wrong question. Instead of where can I borrow money the cheapest, what would the disadvantage be to asking yourself, where is the best long-range home for my capital? Think about it.
Yeah, in a place that you own and control.
All day long. And that's why Nelson emphasized the infinite banking concept has absolutely nothing to do with life insurance. He always talked about stewardship. And so did you realize this wasn't really a conversation about insurance?
Yes.
Conversation about responsibility, being a good steward of capital. There's a reason why I have now 78 dividend paying whole life insurance policies in our family banking system. It's not because I enjoy collecting insurance contracts. If there's a support group for that out there, don't invite me to it. I own them because I've spent the better part now going into my 19th year asking one question: where is the best residence for my money to reside? Not where can I park it? Where can it live? Where can it continue doing productive work? And that's when people are examining their finances. Maybe they're taking a look at the infinite banking concept. Maybe they're taking a look at some other financial strategy. There's something that people overlook repeatedly. Whether you're the owner of a dividend paying whole life insurance policy, when you become an owner, your premiums become a part of the general account of one of the oldest and most conservatively managed financial institutions on the planet. There's a reason why during these financial crises and calamities that we've experienced over the past 100+ years, life insurance carriers remain the most financially solvent institutions on the planet. So that should naturally trigger some thinking. Why is that? Would you agree, Ash?
Yes. And I would say, well, part of that is because they don't have the ability to inflate the money supply.
Hmm.
We're starting to get technical here. Like it's,
Well, in plain English, right? Conventional banks create money where no money existed before. You want to, and you get you get approved for a mortgage. This is the tool that's used to create the money. The keyboard. Money that gets created where no money existed before. And when the life insurance company lends from its own general account while using your policy as collateral, that's fundamentally different from how conventional banks create loans within the banking system. And that distinction really matters because Nelson wasn't trying to get you, me, or anyone else excited about borrowing. He was trying to get us excited about stewardship of capital. And he did such a brilliant job at it, because a dollar that remains under your influence, it can help finance the things that you need throughout the course of your lifetime, where you control how those things get financed. It can help capitalize a business, purchase an investment, help another generation. You became a better steward of capital because you became the banker as it relates to your needs. And that's why Nelson spent no time talking about interest rates. Interest rates explain the cost of a transaction. Stewardship determines the outcome of a lifetime of transactions. There's a difference.
But it's great points. And even on when you brought up, reading that excerpt from page 35 in Nelson's book, on the same page as well, there's one sentence that really stands out to me, and it reads, "This amounts to a personal monetary system."
Right.
And I think people have a tendency to hand over that control to someone else, as opposed to keeping that control with them. And we've said this multiple times, even on this podcast, where if you're not in control, you're being controlled. Both are a decision, and it just is. So you have an opportunity to choose which one of those you want to do.
I agree wholeheartedly. And because there are no exceptions, it's one or the other.
Mm-hmm.
You're either in a position of total and absolute control, or you're being controlled. I've built businesses, I've acquired companies. I've paid premium and dividend paying whole life insurance contracts going into my 19th year. And I've been a dividend investor for 32 years. I've utilized a lot of policy loans, and looking back at all those policy loans and all that activity up to this point, I honestly don't remember the biggest financial wins coming because I negotiated another 1/4 of a percentage point on interest rates. The wins came because I maintained control. The wins came because I had ready access to capital to take advantage of high caliber opportunities. And the access was on demand on my terms without reducing the asset's value and without triggering a taxable event. What a peaceful, stress-free way of life it is when you get the bankers out of your life. And so let me ask you, the viewer, and don't answer me in the comments or Ash in the comments, answer yourself. Like, when you make a financial decision, do you spend more time thinking about the cost of one transaction or the lifetime productivity of your capital? Because whichever one you naturally thought about first, that's your operating system.
And this is a good line that we're on right now, Jayson, because in bringing up control, I feel a responsibility for us to talk about the other side of that, which is control can also be a bad thing. But it's only a bad thing if you don't understand the problem that infinite banking is trying to solve. If you don't understand the problem, then being in control and removing those restrictions can also have the opposite effect if we don't have an understanding, we don't educate ourselves, and we don't understand why we're doing this in the first place, right? Just like Nelson referred to, like, any good tool can be broken, but it's broken by someone who doesn't understand how to use the tool.
Yeah, it's very true. And, for everybody watching, I mean, what Ash is outlining and makes perfect sense is that, yes, okay, you can be in a position of total and absolute control if you're not honest in your dealings with yourself. Then you may end up destroying the very business that is going to create financial prosperity and abundance for you. So if you are borrowing money from the life insurance company without a repayment schedule, yes, you're in a position of total and absolute control. But like Ash mentioned, that could be a bad thing too. It's important to be an honest banker. When you do that, that only represents an advantage for your banking business. Boy, what an advantage that is. because when you access a policy loan and you repay that policy loan, not only with the simple interest that the life insurance company called for, and you're a co-owner of that life insurance company, but you put a little bit more extra capital in as additional premium, your pool of capital, readily accessible capital, can become enormous. And I spoke at an event here recently in Franklin, Tennessee. There were just shy of 400 people there. And the attendees were advisors. And I went on to the stage with the event host and everyone, all the other speakers, wonderful lineup of speakers, amazing people. And they're all presenting in a similar fashion with slides and, that sort of thing. And the host and I went out and just had a fireside conversation. And I opened up the conversation with, I am living what you are all talking to your clients about. And I was in that position as a consumer prior to July of 2008, where up to that point in my life, I had spent my time negotiating the price of money and felt really good about it. The bankers were spending their lives increasing the speed of money. Again, another important distinction, not the rate, but the volume and the velocity, the control. The next time you tell yourself or someone tells you that they're waiting for interest rates to come down, just ask, were banks making money when rates were low? Are banks making money now? If both answers are yes, are we sure that interest rates are the thing we should be obsessing over?
That's one of those questions where you have to kind of stand back and be like, what do they know that I don't know?
Thank you. That is the key.
Exactly.
Because
what are they doing that I'm not doing?
There must be something, right? Because if you're, and these are legitimate questions when you're consuming, right? Can I afford the payment? What's the rate? Will I get approved? So will everything work out, so that I can purchase this thing? The banks ask, who controls the asset? What's the collateral? What's the cash flow? How long is this relationship going to last? In other words, how long have we amortized that stream of payments over? And what's the risk? How quickly can we redeploy the capital? How many times can we get this single dollar to work in favor of the bank? Meaning payment comes in, it's logged as a repayment, which is a deposit. Bank goes, look, we can now create more money that didn't exist before. So if we've got a relationship that's amortized over a long period of time and those payments keep flowing in, and that gives us the capacity to create more money where no money existed before, that's what they're thinking of. So which list sounds more likely to create wealth over 3+ decades? Not Ash's thinking, not my thinking, your thinking. Which list of questions is likely going to create more wealth? Isn't that good?
No, it's great, Jayson. But these are the questions that we should be asking ourselves, right? Like just like, if you're having a conversation with someone, you can just ask them like, hey, so you're familiar with banks, right? Yes. Okay. Do you believe banks are successful in what they do? Yes. So do you think that if you replicated what they did, you would also be successful? Yes. Okay. Well, why don't we figure out what they're doing and just repeat the process? Replicate it.
Become your own banker.
That's it.
I'm living proof. Ash is living proof that you can absolutely achieve that. Ask yourself, what opportunities have you missed? Because someone else controlled the capital. The solution to the problem is outlined brilliantly in this book titled Becoming Your Own Banker. The solution works brilliantly in the implementation. Nelson says, look, this book unlocks the infinite banking concept. The implementation of it, the implementation of the infinite banking concept is the solution to your problem. It's not about insurance. It's not about interest rates. It's about stewardship.
Yeah, there's so many great points and so much great information inside the book. And anyone listening or watching this that doesn't have a copy in their possession now, like you've got an opportunity to get this book, and it literally is life changing, and you don't have to take my opinion for it. You don't have to take Jayson's opinion for it. But pretty much everybody you're going to come across that is either practicing or has started to learn about it will tell you the same thing, that this book, the information in this book has changed their life, and the very way that they view the monetary system that they are currently in.
What's interesting, Ash, to me is that what we had shared earlier around, the consumer being taught to shop for money, and the bankers are taught to steward capital. And that's precisely what Nelson was driving home. It isn't about finding cheaper money. It's about becoming the kind of person who manages money differently. And the infinite banking concept is just a brilliant process to achieve exactly that. And after all this time, again, I can only say to everybody, I mean, I'm just living proof. Like it is a peaceful, stress-free way of life.
It doesn't matter how many times you hear it, Jayson. It always resonates, and anybody who implements this process will be further ahead, no matter what. No matter what. And because this process is designed to further enhance what you're already financially doing, and it works for us, not for someone else, at the you and me level.
Amen to that. And I'd like to leave you with one thought. So if you remember only one thing from today's conversation, I would suggest that you make it this. Like, consumers ask, how much will this cost me? Stewards ask, how productive can this dollar become over the remainder of my lifetime? Those are not the same question. And they definitely don't produce the same future. And so that the next time that you're making a financial decision, before you ask, what is the interest rate? Ask yourself the question that our Nelson Nash spent the latter part of his life teaching us to ask. Am I acting like a consumer, or am I acting like a steward of capital? Because consumers spend their lives trying to buy money more cheaply, and stewards spend their lives making every dollar more productive. And you don't have to change everything overnight, right? You just have to change the next question that you ask, because that can be the question that sets you on a different path. Ash and I were having this discussion before we recorded the Command Post episode today. It can change your path, your future. The question that does that is the one that I can assure you will change how you think. And so, Ash, as always, this was fun. This was a great episode. And to everyone watching, to you, I'm pointing at you watching. Look, I'm living in your phone. I'm in your television. We'll definitely see you next time right here on the Command Post. Money flows. Once you begin to observe the pattern of flow, you start seeing something that most people miss. Money is always being stored somewhere and borrowed from somewhere. You've got car payments, credit card payments, loan payments. You're paying cash for things.